Hello everyone, it's nice to see you again. After learning the quantitative trading, we'll get to see many complicated strategies. However, the complexity of a strategy is often not positively related to its profitability. Sometimes a very simple strategy can be effective. The strategy is a tool for trading, not a magic wand. Strategies can only assist us in trading. And there are few strategies working like money printing machines. Only when you have a thorough understanding of the essential principle of a strategy can you control the risks and use it properly. But the strategy explained in this example is not a money printing machine type, and even the improper use of it may become a tool of liquidation. So what I want to say that if we have a good grasp of the essence of the strategy, even if it's a strategy with simple logic, algorithm or idea, we can easily achieve the profit in the market with only dozens of lines of code. For instance, the strategy board in the example has been run for over a half year. Although there were several floating losses in the middle, the risks were basically all under control. The maximum floating loss did not exceed the accumulated profit either. Therefore, it was very helpful for the confidence establishment of the actual strategy operators. But for the same strategy, a greedy operator will set the parameters very aggressively. I'm sure the final result of that will be the liquidation. In addition, we also need to think of the strategy type in combination with the actual market. I wouldn't run the strategy in the market of some unknown altcoins. I would only run the strategy in the market of some mainstream currencies like Bitcoin or Ethereum. And also I would set the parameters very conservatively. If you have thoroughly read this strategy in advance, already studied this type of strategy and are familiar with its essential principle, you will probably find out what kind of money this strategy makes. Let me tell you the answer. In the more active mainstream currency market, the strategy includes all price fluctuations through the conservative settings of parameters, control the extreme market events that can cause liquidation to a comparatively low probability, maintain a high winning rate on a large scale, and accumulate enough profits through a long period of time. The more profitable it is, the stronger the strategy is to resist risks. Although the parameters can be set very conservatively, the risks still exist and cannot be ignored. Next, let me show you a cryptocurrency bottom-fishing strategy implemented by martingale theory. First of all, open FMZ quant trading platform. I will explain a finished strategy called a simple martingale strategy. The strategy idea is very simple. It's to paint buy orders downwards with spacing according to the initial price and the beginning. If the price keeps going down, continue painting buy orders and keep bottom fishing. Then paint orders of closing position based on the position price with a certain profit difference added, and wait to close positions. If you want to close positions, take the current price as the initial price and repeat the logic above. The strategy doesn't make short positions and it only do long to enable the strategy to run properly. Let's set 6 parameters in first, namely target profit spread, profit target, spacing of adding positions, base spacing, order amount of base position, base amount, position increase ratio, polling interval, contract code, symbol. After setting the parameters, we will enter the section of writing the code logic. Firstly, define a main function. Call exchange set contract type in the main function. To subscribe to the contract type, then construct a polling body by while true loop. In the loop, paint orders by the function painting bid orders. The function pending bid orders is the main function that carries martingale theory. We need to define an index first in the function pending bid orders. The initial value is 0. Next, define a variable amount. It represents the order amount. The initial value is base amount. Then construct the pending order logic of the strategy in while-true loop. In the loop, first obtain the position data and assign a value to the variable post. Then subtract the index number from the current price, and then multiply the result by the spacing of adding positions. The calculation result obtained is the pending order price we need to use when adding positions. After that, we use the multiple assignment operator to calculate the position scale and then add 1 to the index number. Then set the trading direction to buy by calling the function exchange set direction and pending orders of long position by the function exchange buy. When the pending order logic is completed, we are going to construct the closing position logic. We need to judge whether there are positions held currently by the if statement. Then judge whether the positions are long positions by the function getLong. If they are long positions, we set the trading direction to close by calling the function exchange set direction. Then we pend sell orders with a price higher than the current position price. The price spread is the target profit spread, and then close positions. Besides, if the current pending orders or positions are not long positions, we cancel all of them by the function cancel all. Alright, now we have finished the main logic construction of the martingale strategy. Let's test it in the backtest system and also see how it works in the boat. After the backtest, we can see the quantitative strategy implemented by the martingale theory performed very well in the boat. It not only depends on the martingale strategy itself, but also relies on our judgment on the market calls of symbols as well as the setting of parameters. After all, the martingale strategy is a double-edged sword. How to make good use of the sword depends on the judgment on the market as well as the control of self-desires. Of course, it doesn't need too many lines of code to realize such a strategy, but a simple strategy like this can be the unbeatable tool to win in the hands of a trader who knows the market very well. Okay, that's all for today. The explanation of the entire quantitative strategy based on martingale is over. Martingale, like what is shown in the code, symbolizes the simpleness and the two-sidedness of humanity. What we can learn from that is ones that do good turns survive, while ones that do bad turns die. Market is like that, and life is also like that. And lust. I hope every quantitative investor can realize your strategy and functions on our FMZ Quant trading platform through your own talents and obtain a profitable return from the market. In the end, wish you enjoy the investment and happy quantification.